What is going on, you guys, and welcome back to another video on the channel. My name is Brandon, and in this video I want to share with you 3 simple tips that I promise will help get you through the stock market crash, especially if this is your first crash, if you're a beginner and you're not really sure how to approach it, what you should be doing with buying and selling stocks. I hope most of you that are watching this video are coming in with the approach that we want to buy into this weakness. We kind of want to pick up some discounts. If you want to sell and get out of here, well, then you get out of here, because this is probably not the video for you. Or you could stick around and at least kind of hear this way of thinking of things. But tip number 1 for today's video is not rushing in to go out and buy these dips very aggressively. And I know that this kind of goes against the traditional thinking, right? We want to buy dips. We like buying when the stock market goes down. But what I'm saying is that it could be a mistake to just go guns blazing and go blitz and just pour a bunch of money in to these dips that we're seeing and want to invest your capital right away, as we've seen this market drop in the first couple weeks. And it's very common for investors, at least if you're anything like myself, I fall in this exact same camp. It's very common that when we have cash in our portfolios, we want to deploy it. We want to go out and add stocks to our portfolio. We want to go out and take advantage of these discounts. To me, that's just kind of a completely natural thing to do. There's that sense of urgency. It's like, I want to go buy stocks today. Or if you're anything like me, I'm looking at the stock charts. You're like, I want to buy stocks right now. I want to go out this second and go out and buy 3 stocks. Or if you're building up a portfolio, I want to build my entire portfolio today. Buying into a market like this, a down market, and just building up a portfolio in general, that takes time. There is no rush to get that done this very day or tomorrow or this week. When you look at it in the big scheme of things, if you're a long-term investor and you're able to look back, you're able to fast forward 15, 20 years and look back today, it's probably not going to matter whether you bought Apple stock today or next week or a month from now. Really. I mean, the markets are quite volatile right now, but we have to keep in mind this downturn, we could just be at the forefront here, right? We could have a very, very long, a prolonged, downturn coming forward if this virus stuff continues. Well, not continues. If we do see the impact kind of trickle into the economy as expected, very, very possible. So it'd be silly to go out and rush into all your stocks today, like this very second, if you have cash to deploy, when you can kind of wait it out, kind of feel out this market, because again, we don't know what's to come. We can kind of just take it as it goes. If you were going to go out and buy, a house, right? If you're in the market for a condo or a family home, you wouldn't just go out and buy it today. If you're looking for a new fridge for your apartment or a new TV, that process takes a couple of weeks, right? You explore around, you kind of see your options, you think about it, and then you make a decision. Yet when it comes to buying stocks, everyone feels that they have to build their portfolio this week. They have to go out and buy their stocks today. It's a long-term game. Hear the term, it's a marathon, not a sprint here. We really have a lot of time to kind of just take our time, feel out the market, and add stocks as we see value. There's really no rush at all. The second point that we'll talk about today, the second tip for today's video, comes to if you're actually planning on adding stocks, which I think is a good thing. Again, no rush to do it today, but when you do see opportunities to go in and buy stocks, whether that's today, whether that's next week, whenever it is, don't invest all your money in a position at once, okay? Spread it out. I kind of like to think of this as like portioning out your position size. Say you found a stock that fits your portfolio. It's a stock that you feel is offering good value today, and you're like, hey, I want to go out and build a position in, let's just say, Nike stock, hypothetically speaking. And let's assume, ideally you want to go out and invest $3K in Nike. That would be a fully built position for you. Well, rather than going out today and investing the entire $3,000 into that stock, especially when we're in a down market like we are, and there's no real bottom in sight, it's definitely a good idea to just break up those additions, right? Build up the portfolio with time. And, maybe in this case, you could take half of the position. You could take $1,500, go in and build like an initial little tranche or an initial little batch of shares, give it some time, and then maybe a month down the road, maybe, again, there's no rush to do the second batch of purchases, give it some time, check back in later. If the stock's gone down even more, well, then you can take that as an opportunity to go in and add more shares. You can just kind of bring down the cost there of your Nike stock. Again, looking at your position as a whole, that's actually a good thing, right? When the stock goes down further, obviously you'd rather would have waited, but we can never time the bottom. We're never going to hit that. So in order to combat that, we can invest a little bit now, build up the rest of the position later. And again, there's no rush to do that. That can take a matter of months to do. It doesn't have to be done this week. I'll commonly get the question like, I bought Nike at $87 and today it's at $85. Should I go and buy more? No, chill. You can give it some time. This is a long-term game that we're talking about. Now, don't get me wrong. There are a few cases where you can go out and invest more. You can invest, let's say, a full position if you're really confident about a particular stock. If there's a stock that you believe is offering an extreme value and you're happy paying that price, especially if it's a top tier quality stock. It's not to say that you can't go out and invest a full position in there, but especially as you lean towards the more volatile, I guess, stocks that you don't have as much confidence in, this is definitely where breaking up that purchasing period can really help smooth out the process of building up a position. The third and final tip for today's video is another one that kind of builds off that. If you're actually in the market now for buying stocks and you're wondering just when should I be buying? When is the time to pull the trigger? We touched on this in the last video. You need to assess each company at the price that they're trading at today and don't second guess your entry price. This is one of the most deadly things that an investor can do, is to go in and purchase a stock. This is one of the most deadly things you can do in general, but especially in a falling market like this, is to go in and purchase a stock, check back in tomorrow, check back in a week from now, and if the stock's trading lower than what it is today, start panicking and freaking out that they made a terrible purchase. You can't have your brain programmed like that when it comes to investing in general. And again, especially in a falling market like this, it should almost be expected that when you go in and buy a stock, it is going to fall down lower than when you lower than your first original purchase. And in all honesty, you have to be okay with that. Again, your goal as an investor is to accumulate a position for as low of a price as possible. You want to buy low and sometime down the road sell high. That's what you're aiming for. So logically, we actually want the share price to come down. If you buy Nike today and next week it's down 10%, next week it's down 20%, that's actually a good thing. All right, we're never going to hit the bottom. And if you are constantly revisiting, constantly looking at the price that you bought and comparing, you're going to drive yourself crazy. I can recall a personal story with this. This goes back a few months on the channel when Apple stock, it was when they stopped releasing their unit sales, right? Apple's going to stop reporting how many iPhones they sell. They're going to cut that out of their earnings report. And the internet went crazy about this being the end of Apple. The growth is done. Apple's doomed. Share price started falling down. At one point I took a position. I forget the exact price, but let's say it was 174. Again, I don't look at this stuff as much as a lot of you do. Purchased a stock at, let's say, 174. Detailed it on the channel, and about a week later I was getting comments saying, you freaking Apple's at 163, you idiot, you don't know how to pick stocks, blah blah blah, all sorts of stuff, right? And that's fine by me if that's the way that you're approaching this stock market game. But to me, it kind of just makes me laugh because I had nothing but confidence in my original purchase price. The market cap on Apple had dropped down to about, I think, 800 billion, 900 billion, something along the lines of that. And I just thought there's no way in heck that this is not going to hit up that, surpass that $1 trillion market cap again. No chance, a company like Apple. I was comfortable with the price I paid. I didn't even care that a week later, the stock market valued it at less than I paid. I was happy with my price. There's two options you can do in that case. You can go in and buy more shares if you're really confident in the company and if you're looking to build a higher position. In my case, I just simply held the stock. We all know kind of what happened after that. Apple stock went on to do very well. Chart's probably not looking as good as we speak during this market crash, but don't second guess your picks, guys. You can't come in it with that approach. And it can really be as simple as that when it comes to investing in bear markets. Those are just 3 very simple tips. Not rushing into stocks, not going in today and feeling the urgency to go out and deploy all your money today because we could have a long road ahead of us. That's what's to be expected. Point number 2 is that if you are going to be adding into positions, break that up, do it over time. There's no need to go in 100% all in unless it's a company that you're very confident in. And number 3 is that when you do go in and buy stocks during a falling market like this, do not think twice about the price that you pay. You got to do your research beforehand that you're still paying a good price. It doesn't just mean that because, for the most part, A lot of stocks are on sale, but some are offering more value than others. Some companies are offering more deeper discounts than others. That's on you to do your research and find a company that will fit well with your portfolio. Find a company that you feel is offering some good value at the moment. If you're happy paying that price, pull the trigger, start nibbling, and then don't second guess it. If anything, wait a week, wait more than a week, wait a couple weeks, wait a month, and maybe look to build up that position. But those are 3 tips that I'll leave you guys with today. If you enjoyed and you like the tips, feel free to give this one a thumbs up. That is an awesome way of showing your support on the channel. If you're not subscribed to the channel, if this is your first time here, we post videos like this every single week. We post usually multiple videos a week, usually 2 to 3, depending on how things are going. So hit that subscribe button and hit the bell for notifications so you get notified when I make a video. And lastly, you can learn more about our investing academy. Down below, if you are a beginner to the stock market, if you're a Canadian that is looking to get started, you want a little bit of guidance in building a portfolio, setting up your accounts, going through that entire process. If you're a little bit wishy-washy about it, we're taking Canadians step by step through the entire process, all done online from the comfort of your home. You can click that first link down below to learn more about becoming a student. But as always, I thank you guys for watching. I hope you enjoyed the tips, and I'll see you in the next video.